Hello guys, hope you are doing well. Today I'll teach you the fixed and comparing securities, another problem, and using the FIFO and WAC. In the question they have asked only FIFO, but I'm also teaching the WAC method. Before starting to the video, if you like what I'm doing, please subscribe to my channel and hit the bell icon for more videos because that keeps me motivated to upload more videos consistently. Now, the problem. Following information is presented by Mr. Z, a stockbroker, relating to 9% government bonds. Okay, whenever you see 9% or some fixed percentage, it is called as fixed bearing income scripts, and you need to do in this method which I'm going to show you now. Then the opening balance is having the nominal value of 1,20,000, which you are writing it in the nominal value, nominal column. The cost 1,18,000, you are writing it in the cost column. In this question, they have given the opening balance and the due date and the year end is not equal. So you need to write the interest accrued in the opening and closing balance. They purchased 200 units at X interest price of rupees 98 each and sold 500 units at X interest price which had the nominal value of 100 rupees. On 110 they purchased 150 units at rupees 98, that is at the cum interest price. Next, on 111 they sold 300 units at rupees 99 at X interest. Then the interest dates are 30th September and 31st March. This is books of accounts at 31st December, so due date is not equal to the year end. Then using FIFO method, prepare the investment account. Here I'm also showing the FIFO and WAC method so that it will be easy. Whichever the method it comes in the examination, you can do that. Now we'll start with the answer. Now whenever you get a question like this, please prepare a format like a straight line and list out all the dates so that it'll be easy when to post what. Okay, now the year end is 31st December, na? So right here 31st December. Okay, so the starting of the year will be 1 to 1 1, yes or no. Then write the due dates. First you need to write the year end and year starting, then you need to write the due dates. Here the due dates are, first is I can say it as 31st March. 31st March is the first due date. Okay, next 30th September is the next due date. Make some diagrams like this so that you will get adjusted with that. If you see this diagram, then it is due date like that. That is optional, but still you can do it. Next comes the then purchase. First what they have purchased. So okay, one I can write it here. So I'll write purchases in the upper part of the line and sales in the down part. Okay, so on 1st March 2011 they have purchased how much? 200 units at rupees 98. Write as E because it is X interest. On 1/7/2011 they sold what they sold? They sold how many units? 500 units at rupees 100, and this is of the X interest price. This is 1/10/2011 they purchased how many units? 150 units at rupees 98 and at cum interest. So I'm writing it as C. Okay, next is they sold on 1/11/2011 they sold 300 units at rupees 99 of the X interest. Okay, so that's all. Whole question should be in this format so that it will be easy to do the working. Okay, next. And another thing you need to write is, this is having opening balance, so opening balance should be also be adjusted with the interest receivable. See here, due date is not equal to year end or year beginning. Due date is here, year end or year beginning is here. Okay, same thing, due date is here, year end is somewhere else. That's why you need to post one entry for the interest. Okay, write it here, year end is not equal to due date, year beginning is not equal to due date. So you need to pass an entry here. Our format is ready. Now we'll post the entries. On 1/1/2011, okay, opening balance to opening balance, we have nominal value as 1,20,000, but the cost, okay, is at rupees 1,18,000. Next, after this we need to post the interest, okay, on 1/11, that is accrued interest. Okay, so to interest receivable, I'll explain this concept and then post here. See, the due date is here, okay, and in the past only, in the past year, from 30th of the September till March, you will not be getting the interest. Only on 31st March you will be getting interest, but interest is accrued. Okay, now I told you that in fixed bearing income securities, interest will be accrued and you need to post the entry till that it is accrued. So on 1st March of the months which is earlier, you need to accrue that interest and post that accrued interest in this year. So that's what you're doing. Suppose in the last year you received on 30th September. Next is October, November, December, January is not there because January is 1st January. So for 3 months interest, you need to, 3 months interest is accrued. So you need to post the entry that interest is accrued. So for 3 months you are calculating the interest. Okay, interest should be always calculated on the face value or nominal value. So on this you are I can say on this you are calculating the interest for 3 months. So 1,20,000 into 9%, this is for whole year. So into 3 divided by 12, so I getting 2,700 as the interest. I think you cannot see my calculator clearly. It is 2,700. So write it in the interest column as 2,700. Module, what it does is, it will just doesn't pass separate entry, it will merge it in this opening balance itself. You can do that also, you can do this also, but this will be more clear to the examiner. Next, opening balance is done. Afterwards, what we need to do, on 1st March 2011, 200 units were purchased at rupees 98. So what I told, whenever there is a purchase or a sale, we need to go and do a working note in the format which I told you in the earlier videos. So if you haven't watched that video, please go and check that video so that you will get a clear idea of how to do this working. So we will go to the purchase. So this is the working note. We have purchased it on 1/3/2011, and how much was the face value of that? Face value of that is rupees 100. Na? So 200. We have purchased 200 units. So 200 into 100. 200 into 100 will be 20,000 rupees. Face value of that is, face value or nominal value is 20,000 rupees. And well, from what we need to take? From what is the last due date? Last due date was on September. Yes, no? September. Leave the September. 30th September is the last due date. September. Okay. 30th September was the last due date. From leave the September. October, November, December, Jan, Feb. On March you're purchasing, na? So leave March also. 5 months. So from what date? 30th September. 30th September can be written as 110 also, na? 11011 to this is 1st March 2011. How many months? 5 months are there. Okay. Now they have given you what? X interest? Yes, X interest. They have purchased the 200 units for 98 rupees at X interest. So X interest is 19,600 and you will calculate the interest now. Interest is always calculated on the nominal value or face value. 20,000 into, this is the nominal value, 20,000 into interest is 9%. 9% into, this is for the whole year. How many months you need interest? Interest is for 5 months. 5 divided by 12. So you will get interest as 750. X interest plus interest will give rise to cum interest. So 750 plus 90,600 will give you cum interest, that as 20,350. In this question there is they haven't given about brokerage, so we'll put a dash for that. Now this calculation is done. We'll post this entry here. Okay. So on 1/3/2011, okay, to bank account. Whenever you're purchasing, investment account debit to bank account. So here nominal value, how much will you write? 20,000. Nominal value 20,000. This one nominal value which you are getting, this one is here 20,000. Then interest, how much interest did you get? 750 interest in the interest column which is given. Here what you will write, normally if brokerage is given, you will write this column's amount here, but in this brokerage is not at all given. So in this column you will write only X interest. If brokerage is not given, we will not get net of brokerage, hence we are not writing this. Normally we will write net of brokerage. If net of brokerage is not available, we will write the X interest column's amount. So be careful in writing the column and the amount. Okay, you need a lot of practice. So 19,600. Done. This entry is done. So purchase is done. Next comes the due date. Okay, for due date is for giving the interest for last 6 months in this problem. Okay, so in this date you will calculate the interest and interest of the previous stocks which you are having it, and how much is the nominal value. Interest is always calculated on the normal value, yes or no? So total of the nominal value is 1,20,000 plus 20,000 will be 1,40,000. So in 1,40,000 into 9% interest. So in this 9% interest is for the whole year into 6/12. Okay, how much do you get? 6,300. Always you are receiving the interest, so you are crediting this. Okay, always interest received should be credited. Next, on 31st March 2011 by bank, and you are not writing it in the nominal value, you are not writing in the amount column, only on the interest column, 6,300. This is over. This entry is over. Next, the next scenario is on 1/7/11 you have sold 500 units at 100 rupees of the X interest price. So when you are selling or purchasing, go to the working note and do the routine procedure. On 1/7/2011, what is the face value? 500 into 100 will be 50,000. And from what is the due date for this? This is 31st March now. So 31st March or 1/4 is none of the same. Everything is same. Next to 1/7/11. How many months? April, May, June, July. July is not there because on the first date only you have sold it now. So 3 months. Okay. Then on what price did you sell it? On X interest price. So 500 into 100. 100 is the X interest price. Here what they did is the nominal value, that is nominal price 100, that and the ex-interest price is same, because 100 for each of the thing, that's why it is same. Next, interest, 3 months interest, okay, on 50,000. Interest will be always calculated on the nominal value. 50,000 into this 50,000 into 9% into 3 divided by 12. So we get 1125, and ex interest plus cum interest will be 51125, and brokerage is not there. So post this entry. You are selling this, yes or no? So selling will be on the credit side. On 1/7/2011 by bank, nominal value is 50,000, then interest is 1125, and the amount will be, you will write the ex interest amount only, not this. Come interest amount will not come in this investment account. I hope it is clear. Only ex interest amount will be written here. Okay, 50,000. Next, okay, here whenever there is a sale, either there will be a loss or profit, and you need to calculate that and record it. Then only you can move to another scenario. Okay, here you have 50,000. Okay, you sold that. In this question, they have particularly mentioned as use it as a FIFO. So in FIFO method, what is the first stock which is available to you? That only you will, from that only you will release the stocks, yes or no? So in this 1,20,000, this is first. Now opening balance, in this 1,20,000 nominal value, 50,000 is sold. So you need to know what is the exact price per unit and what is the amount of this 50,000. You know that 1,20,000 is costing 1,18,000. Okay, 1,20,000's nominal value is costing rupees 1,18,000. Then you should also know how much 50,000 is costing actually. Yes or no? So write like this: 1,20,000 rupees of the nominal value is costing 1,18,000 rupees. How much? But how much 50,000 of the nominal value would cost? Okay, then do the cross multiplication. So when you cross multiply that, that is 50,000 into 1,18,000 divided by 1,20,000 will give you around. So this will be approximately 49167. Okay. This is the cost. Now you got to know the cost price. Okay, this the cost was 49,167. You sold this for 50,000. You got the profit, yes or no? So 50,000. Now profit is equal to 50,000 minus 49167. Okay, minus 49167 is 833 rupees. So 833 rupees is the profit. Now I told you that profit should be always recorded on the debit side of the investment account. If you have watched my earlier videos, then you would have got the idea. And again, it will be a recall to you. So on 1/7/2011 to P&L account, you got the profit, and profit should be recorded only on the last column. So write the profit 833 rupees. Going to our next scenario. Our next scenario is the due date. So the due date has come and we need to pay the interest for the following stocks which had in the earlier period. We had 1,20,000 plus 20,000 and we sold 50,000. So the balance is 1,20,000 plus 20,000 minus this 50,000. So the balance is 90,000. On the 90,000 face value, we are going to put the interest, accrued interest. Okay, I'll show you here. See, first we had 1,20,000 and 20,000. The next, In the first, while using the FIFO method, okay, we sold 50,000 units of this. Then how much is remaining here? Here it is of remaining is 70,000 rupees, 70,000 of the nominal value and 20,000. So on this we are putting the interest. So total is 90,000. 90,000 into 9% interest for 6 months. How much that would come to? So the interest is 4050. Now you are writing this interest in the investment column. As on 39/2011, you receive the interest, and interest will be written only in the interest column. So 4050. Understood? Next scenario is on 1/10/11, purchased 150 units at rupees 98. This is the cum interest value. Okay, now we'll go back to our working and do the workings. So here is that on 1/10/2011, what is the nominal value? It is 150 units, 15,000. And what was the due date? Due date was the next day. The next day of the due date only he have purchased. Thereby you will not have any interest. That is 1/10/11 to 1/10/11. Number of months is 0. He has purchased it at cum interest. Okay, so you need to write it in the cum interest. What was that? 150 units he have purchased. 150 into, he purchased it at 98 rupees. So 14,700 is the cum interest price. You need to write it in the cum interest column. Next, calculate the interest. Interest will be nil because it was not. It was purchased in the next day itself. So 1400 will also 14,700 will be the ex interest price. Okay. Now we'll write this in the investment column. Okay. 1/10/2011 purchase to bank account. The nominal value is 15,000. Okay, interest is not there, and the ex interest price is 14,700. Always write ex interest price in the amount column if net of brokerage is not given. Next, purchase. The next scenario is this. We have sold 300 units at 99 of ex interest price. Okay, again we'll go to the working. On 1/1/2011, 300 units. 300 into 100 will be 30,000. Okay, then from what is the due date? 30th September, that is 1/10/2011 till 1/1/11. The next day only is the November, so only 1 month. So, and he has purchased it in ex interest price. Okay, 300 rupees into 99 will be 29,700. So write it in the ex interest column, 29,700, and interest will be calculated as 30,000. 30,000 into 9% divided by 12. So interest is 225 rupees. 225 plus 29,700. Add this, you will get the cum interest price. 29925. Brokerage is not there. So record this. 1/11/2011 by bank. The nominal value was 30,000 rupees and interest calculated was 225 rupees. Ex interest column price is 29,700. That was the cost. Now I told you, whenever there is a sale, you need to see whether you got a profit or loss. For that we should do a working. Now we'll do the working. Okay. So in the next scenario, we had 70,000 in the first opening balance, then 20,000 in the next opening balance. After that, in this they have issued, what is that, nominal value of 30,000 units. 30,000 units. So what will be the remaining thing? 30,000. Okay, and here is 20,000. Okay, leave it apart. Now 30,000. So again same calculation. 1,20,000 of the nominal value will give a cost of 1,18,000. Okay, how much do 30,000 will cost? After cross multiplication, we get 29,500 as the value of the cost. As 29 on the sale of this, the face nominal value is this, but the cost is this na 29,700. So you will take 29,700 here. You will get the profit as 200. So while calculating profit, always take X interest amount minus the cost of the value, cost of it, and you will get the profit or loss. Okay. Now record the profit here to bank account. No, year end is not equal to due date. Year end is not equal to due date here. That year end is 31st, but due date is 30th September. Okay. To do the transaction, you need to post the transaction of the accrued interest here. Okay. For how many months? 3 months. How? From 30th September to 31st December. Okay. Leave September because it is already 30th. October, November, December. Okay. 3 months. 3 months accrued interest on the value which is now being in the stock. You know, you are having 1,20,000. 1,20,000 plus 20,000. Okay. 1,20,000 plus 20,000. Next, this 15,000. 15,000. You add that. Now you have sold 50,000. Sold 50,000. Next, sold 30,000. So the remaining stock is add these and minus these in the nominal value, because you will always calculate interest on the nominal value. So add these and minus this. Now the stock remaining is 75,000. So 75,000 of the stock is remaining here. On 75,000, you need to calculate the interest. Okay, 75,000 into 9% into, for how many months? 3 months. Accrued interest, yes or no? So into 9% into 3 by 12. 1687.5, and approximately it is 1688. Okay, because it is 0.5, you are putting it as 1688. Now post this entry into the investment account. Interest receivable account. Interest receivable. Then the interest calculated is 1688. Okay. Year end is not equal to the due date. You will be writing by interest receivable or to interest receivable, but only when you are getting the interest, then you are writing it as by bank. Okay, so you wrote 1668. Now interest column is the balanced interest column is done. Now you need to first balance the interest column, to add this interest column and deduct this interest column amount, so that you will get a balance, that is profit or loss. Okay. Now we'll add this interest column, that is 6,300, 11125 plus 4050 plus 225 plus 1688. Okay, 13,138. We'll write here 13,388. Sorry, 30 in the interest column. 13,388 minus 2,700 here, minus 2,700 minus 750 will come to 9938. Okay, so that will be it will be called as on 31st December 2011 to P&L account, and this will be the balancing figure of interest column. Balancing figure. Now we will see how much of the investment is being with us and what is the value of that. The opening balance was 1,20,000, and again we purchased 20,000. Then we sold some of the units, that is 50,000 of nominal value units. Okay, and this was there. So what was the remaining is, here will be of the 70,000 and here is 20,000. So we had totally 90,000. Then in this 70,000 and 20,000, and the 70,000 and 20,000, again we sold 30,000 units. Okay, so the remaining will be of 40,000 plus the 20,000. Okay, now again we purchased again 15,000 units, 15,000 of the nominal value, 15,000 of the nominal value. Now our investments total value is this. Okay, so 40,000 plus 20,000 is 60,000, 60,000 plus 15,000 is 75,000. So the nominal value of the closing stock is 75,000. And what is the value of this? Okay, as we know, 1,20,000 of the nominal value was costing 1,18,000 rupees. Now in the whole bunch we sold 50,000 and 30,000 of the units. Okay, that is 80,000 we sold. So remaining is 40,000. So the whole 40,000 stock will be valued using this. Okay, cross multiplied. 40,000 into 118,000 divided by 1,20,000. The cost of this is 39,333. Okay, next the first bunch is over. Next is the second bunch, that is 20,000 and 15,000. Second bunch is 20,000. 20,000 rupees. You can see here 20,000 is having the value of 19,600 and 15,000 is having the value of 14,700. So add these. Okay, I can add these. How much do we get? So the total of this is 73,633 rupees. So this you are writing it here. By balance brought down on 31st December 2011, the nominal value is 75,000 and the total column is 73,633. Okay, total of this this is 1,55,000 and here is 33,333. So that's all about this question, and here is the FIFO method. Now we'll see how will be the WACC calculation. So here we are calculating closing stock using WACC, weighted average cost. Okay, so first we are having 1,200 units as a opening stock, then got 200 units more. Okay, for a WACC you need per unit amount. Okay, so 1,20,000 of the face nominal value or face value is having the cost of 118,000. Okay, how much is the per unit cost? Okay, so here we are taking that 1,18,000. Okay, 1,18,000 divided by 1,200 units. You are getting the cost as 98.33. Okay, so you write this as 98.33. Then you have second one, 20,000 nominal value is having the cost of 19,600. 19,600 divided by how many units? That is 200 units. So 19,600 divided by 200 units, you get the price as 98 rupees. Now how do you do the WACC? Okay, whenever you sell, you need to prepare a WACC. 1,200 into 98.33. Okay, cost of this plus into 98 divided by the total of the units 1400. So this we get 98.28. Now this is the balance. For the balance we need to measure with this value. In first we had 1400 units. In that 500 units are being sold. Now we are having only 900 units. So 900 units is having the value of this 98.28. Okay, 98.28. Take this now. 900 into 98.28. Okay, another purchase was there. After purchase you are selling it, so add that purchase. What is that purchase? What? 150 units. You don't know the price. Now we'll find out that price. Okay, what is the cost of that? Here you have given now 15,000. 15,000 of the value is having of 14,700. So 14,700 divided by 150 units is 98 rupees. So into 98 divided by this 900 plus 150 units got added now. So 1050 units. Now you get the WACC. Another 900 into 98.28 is equal to M plus next 150 into 98 is equal to M plus recall the memory. After you recall the memory divided by 1050, you get 98.24 as the per unit. So our remaining balance would be 1050 minus how much did we sell? I think 300. Yes, 300. So 1050 minus 300 will be 750. So 750 units into 98.24. So we get 73,680 as the closing stock. Okay, so that's all about the WACC. So thank you so much for watching, guys. Please support me because I'm explaining each and every point so clearly. So you guys have to support me by subscribing to my channel, hit the like fat button, and also share to your friends so that even I'll get motivated and film more videos for you all. So hope you guys do that. Thank you guys. Thank you so much.